Afternoon, everyone. Great pleasure to be here. Thanks to Reed Corporate for putting this on. It's always a little bit hard with the nickel story in this current market coming up behind a fantastic gold story that's just shooting the lights out, but I'll try to do my best to demonstrate why thinking at the bottom of the cycle is actually a good time to be investing in a great nickel story. And I think one of the things to really hit home is that if you look around the ASX right now, there really are no other nickel sulphide plays that you can invest in. And that probably says something about Centaurus, the fact that we're still there, that we've still got a fantastic asset. It is one of the lowest operating cost assets if we can bring it into production, and hence why we're still working the project and why we still think that there's tremendous value to be had from looking at Centaurus as an investment proposition. So you combine that with a couple of the other assets that we've got. As Nicholas said, we're drilling out now a small copper project that could turn into something reasonably significant. It's only 20 k's from an existing copper float plant that BHP own in the Carajás region. And we've also got our historical iron ore asset, which is sort of in the wings, sleeping, but we're doing a bit of work to try to add value for our shareholders. But when you focus back on the main game, which is Jaguar Nickel Sulphide Project, we've got a really, really good asset that we delivered a feasibility study on in July last year with great economics. I'll talk to you about those economics today and also tell you sort of what we're doing to sort of advance that over the next 6 months. Just looking at Brazil, there's a number of attributes there. I know everyone loves to talk about where they are. Yeah, it's Brazil, but we have a fantastic fiscal regime with a tax rate that's probably around 15%. We've got a country that's got 80% renewable power on its grid. What that means for us is low power costs. So yes, it's got a very, very low carbon footprint, which is nice, but I'm all about making sure that we can make money from our project. And what distinguishes Brazil and getting projects up and running in Brazil is to have 4 cents a kilowatt power costs makes a huge difference to operating costs, which in turn allows me to keep my costs at the bottom quartile and compete with Indonesia, which is the name of the game if you're in nickel. So if we can do all of that, we've got a very profitable operation on our hands. So just diving into some of the work we did and where we are, Carajás Mineral Province is in the northern part of Brazil. It's got some of the largest mineral deposits anywhere on the globe. Probably this area is about 100 kilometres by 150 kilometres. Top of screen, you've got the Salobo mine, which is the biggest copper mine in Brazil, owned by Vale, pushing out towards about 36 million tonnes a year of feed through that plant. Salobo, in the middle of screen, is another copper project that Vale are operating right now, growing that out. In addition, they've got S11D, current 90 million tonne production of high-grade 65% iron ore. So you've got, with that, a huge amount of infrastructure that's in this region. You've got sealed roads, you've got high-voltage power, you've got ready-made workforce that is now probably third generation, and we can capitalise on all of that. I think more recently you've seen bottom left there's a project called Boa Esperança, owned by Ero Copper. That's a 4 million tonne copper float plant that went into production late last year. So to show, to build a float plant in this part of the world is very, very doable. Someone's already done it only very recently, and we want to be the next one putting a 3.5 million tonne per annum nickel float plant in that same jurisdiction, which is only 40 kilometres from there. You can see from the Google map, we're dealing with farmland. So mining is a big deal. People want to be in mining. As I said, there's third generation families up there that have been in mining all their life when Vale first set up in this Carajás region. Looking at some of the infrastructure that we'll have, that port in the middle of the screen is Vila do Conde port. That's where we'll be shipping our concentrates out of. On the bottom left is the town where we're based, about 35,000 people, another 35,000 people in another town 6 kilometres down the road. Hydroelectric power, as I said, that's a huge advantage for us from an operating cost point of view. And bottom right is just the Ero Copper operations, just showing what they were actually able to achieve. So the feasibility study, as I said, came out in July last year. 3.5 million tonne per annum operation is being proposed. That gave us 18,500 tonnes of nickel per year, which is on a global basis, that's a pretty significant production base. You look at the net present value, nearly $1 billion post-tax NPV, and there's not many projects that would have that sort of economics for this sort of commodity. And our operating cost, which is for me the biggest thing to pull out of this project at $3.60 odd a pound, I think it is, on an all-in sustaining basis. So on a payables, roll that out to about $4.70. We haven't seen nickel prices fall that low. We would still be making money very comfortably today, even with today's nickel price, which in my mind is quite low, and I'll show you that in a little bit. We're doing some work now to just, value engineer this. This feasibility study was done on the basis that we would be going downstream. We pulled back from that, said we're just going to produce a concentrate. But by doing that, we wanted to get the numbers into the market as quickly as we could. And in doing that, we sort of kept the flow sheet the same. We kept the mine plan the same as what would have been for the downstream. And there's some very nice value enhancements that we can see come through when we focus on it as a concentrate-only project. So a few key takeaways, the resource. Now, 1.2 million tonnes of contained nickel metal. When we did the feasibility study, we were around that second last bar of 950,000 tonnes contained. In August, we put out the resource upgrade, which took us to 1.2 million tonnes. You can see most of that in the gold is indicated, measured and indicated. So, very, very confident in the ore body that we've got. And on a global basis, that stacks up extremely well. There's not too many projects that are going to be better than this from a nickel perspective. And costs, we're down in that bottom end of the cost curve. And I can't reiterate enough that if you're in nickel, you need to be able to compete with Indonesia. Indonesia is the market bellwether for nickel. It's been producing a lot. There's a lot of supply coming onto the market. The demand side of the equation hasn't kicked in as much in Europe and North America as what people thought it might. But it will turn. And when we speak to the strategics that are looking at nickel and know the game, they know that they're going to need to find supply. And a project like ours that's got a sort of plus 15, 20-year project life is going to be one that people are jumping after when the nickel price turns. So being at the bottom end of that cost curve is extremely important. And we know that we'll be able to make very, very good money when we look to bring this on stream. And what I wanted to show just with this price chart, so this is looking at nickel price, LME nickel, over the last 20 years. When nickel turns, it can turn very aggressively in a positive way, and you can make huge amounts of money if you're in the game. So we know that we've got a project that's economic. If you look at that bottom line, the red line, that's our all-in sustaining cost on a payable basis. You have not seen, or you've seen very, very few situations where the nickel price has fallen below where our cost of production is going to be. And if it's got down to that level, then there's a whole bunch of other people that would be coming out of the market before we would. The gold line there is where the current spot price is, and there's still a number of situations through that 20-year project horizon where you can go, okay, we're still making a huge amount of money over and above where we are. So I feel like nickel's sort of at its bottom. It sort of touches this $15,000 a tonne, and then it sort of hovers there for a while, then it tries to peg up. And what we need is the demand side coming out of Europe and North America to kick in, and you should see the nickel price continue to move up. I think rhetoric that I've heard through the market is that there's still, the Indonesians don't really like the price where it is. They would still rather it be sitting around $18,000 per tonne. Whether it gets there this year, don't know. But we know that for our project, we can make money at any point in the cycle. Environmentally, we've got the preliminary licence, which is the main part of the environmental approval process. We think that we'll be getting the installation licence for the project in the next few weeks. I've heard that before, so I'm not going to hold myself to that, but it should be very soon. That allows us to build the project. Once we've got that installation licence, we'll get the mining lease from the mines department. That allows us to mine. And the combination of those things in conjunction with the funding is what we're going to need to be able to make an investment decision. So that's probably the next biggest piece of the puzzle, is getting through the licensing process to put us in a position where we can actually do the work and make that investment decision. So just quickly touching on the value engineering work, we saw some opportunities to redo the mine plan, take away the back-end constraint of the refinery, allow the mine to be able to produce more nickel in the early stages of the project, have earlier payback, so we're doing that work right now. We've also done a lot of work just on the product, and the key to that is logistics. So we had a 12% nickel concentrate grade in our feasibility study. We've just completed pilot work which demonstrates that we're going to be able to get an over a 30% nickel concentrate, and that's just not available in the market. The reason that it's not is that most nickel is a pentlandite, is the nature of the sulfide species. We're dealing with what they call a millerite, which is the highest tenor nickel that you can have. So with that, we feel that we can produce a very, very high-grade nickel concentrate over the life of the project, which is going to be very attractive and get some additional payability. But importantly, from a logistics point of view, it could save us over $250 million over the life of the project, and that's going to be significant. So a combination of what we're doing with the mine plan, combination of the processing and the flow sheet, and with that final product, we're going to flow that all through into, I guess, an extension of the feasibility study, which we're looking to have out by the end of March. And I'm hopeful that we can sort of generate at least additional 30% on our project economics compared to where we were in the feasibility study, which was already pretty strong in my opinion. So then with that, we've got to complete the funding process. So we've been working with Standard Chartered Bank around financing, that we've got people in the data room doing all their homework. They're waiting to see what this value engineering looks like, and once we've got that, hopefully through the second quarter of this year, we can put the finishing touches around who we're going to partner with at a project level, bring the equity capital that we need. And we're looking at it from that perspective because right now our share price is crap, let's be honest, and we don't want to be diluting our shareholders unnecessarily. So, if we can get a better look through from a project valuation perspective and sell down a minority interest at the project level to get the equity capital that we need, well, that's what we will do. We recently got selected into this BIP program in Brazil. There's 9 projects in there. It's a Brazil government initiation to attract foreign capital back into Brazil. There's probably 10 billion plus of available funding in there, and it's about presenting your project and demonstrating to these various groups that that's something that they want to invest in. So we've got to do the work around that, but importantly, we've been accredited by the Brazil government as a project that fits the criteria for those sort of investment money. So we don't know where that'll lead us, but it's a nice little positive step and I guess a way of validating what Centaurus has got as a project. So quickly running out of time, but I want to touch on the Boi Novo project. So again, the same map as what we had before. Sort of towards the top right there is the Boi Novo project. As I said, it's only 20 kilometres from an existing copper float plant. So the project doesn't need to be massive to be economic. We did a lot of early stage work last year. We did soils, we did mag, we did fixed loop EM, we got some targets, we drilled those targets. We've then done downhole EM surveys, which has allowed us to hone in on where we think the mineralisation is. And we've had, I guess the last drill holes that we put into that just before Christmas last year were the most successful holes we had. So we had this intersection of 5.5 metres at over 8% copper. And we're now back there this year. We've started about a week and a half ago with a new drill program chasing up those targets, and we want to see what that looks like. But having a plant only 20 kilometres down the road is highly advantageous for this project in a world where the Carajás is really renowned for its copper. So when you put all of that together, Jaguar where it is, the value enhancement that we're looking to bring together with the Boi Novo work that we're doing, and we look at the market cap where we are, we think that there's huge amount of upside, that we're really where we are because there's no eyeballs on the nickel sector anymore. Headley and Grady were up here this morning, nickel didn't crack a mention. And that's because there's no one in that space. If you look at the Australian nickel sulfide sector, it's on care and maintenance or it's gone into receivership, and that's a function of the cost structure. Whereas in Brazil, you have a very different cost structure driven by the low power costs, which enables you to be at the bottom point of that cost curve and compete with the Indonesians week in, week out. So for us, we know that the market will turn, nickel always does, and that we want to be there to capture that because if we're up and around and operational, when these spikes come, we're going to make a huge amount of money and it'll just dwarf what our market cap is. So I'll leave you with that, just over allotted time, but if you want any other questions in relation to that, obviously be around next door and have a beer and chat about it. Thank you very much.